Turn the mic on. Let's see, make sure we're all good. Hey everybody, Lawrence from Financial Thing, back again, Thursday evening, live stream. Hope you guys are doing well. Cheers. I know it's been a while, a couple of weeks. I honestly wanted to be here the last couple of weeks. I really did, but I've started a little side business venture and it's just kind of messed up my schedule during the day. So day here, night time, evening for you. And I'm a little bit more inflexible with my time, but here we are. Please hit that thumbs up if you can. We'll be talking about peer-to-peer lending. And I think in the future, what I'm going to be doing is more impromptu streams. So not necessarily Tuesday and Thursday at 7:30 p.m., but if I know that I have a 3 or 4 hour window during the day or evening time for you on any given day during the week, I'll probably just send out an email and say, hey, streaming today in half an hour. You'll get a notification on YouTube, and better to do that, I think, than not to have streams scheduled at a certain time. And look, if you can't make it, you can definitely watch the catch up because it gets archived. So let me know what you think. If you'd rather have, just kind of impromptu streams where you can tune in or watch later rather than have no streams, I think that's a better idea. Excuse me, I had this cough. I almost didn't make it today, too. I really didn't think I was going to be able to, but here we are. Anyway, hope you are well. I know you've been surviving some pretty good heat waves over there. So have we here in Florida. It's been very hot. Stay hydrated. My tip of the day from your Uncle Lawrence. So what are we going to do? Let's do a little shout out to everybody here. Let me pull up where's the comments? It's been a while since I've done this. I forgot. Colin is here. Hi, Colin. Colin Perry. So familiar names. Chimpo, Naughty Darren in Cambridgeshire. Stephen Hale in Nottingham. Paul in Kenilworth. Peter Vince, of course. Peter Clark. A lot of Peters. And Aki Chapter in Accrington. Wherever you are watching from, leave a comment. Let me know where you are. I always like to know where you're tuning in from. We have to have a quick chat about the stock market. Hi, Mike Powell, Southampton. The stock market is just doing some really wacky things, but it's kind of doing what I thought it would do. We've had that wick down as the economic environment becomes more difficult. I think we're still on the brink of, possibly a bigger downside. I mean, some people are saying we've hit peak inflation because we had inflation numbers come out in the U.S. at 9.1%, which is crazy, and that was the numbers from June. But you imagine things are 9.1% more expensive in the U.S. than they were at the same time a year ago, which is nuts. And I expect the UK inflation rates to be maybe not that bad, but somewhat similar, probably 7s and 8s. Whether we've seen the end of it, I don't know. It seems like the governments are trying to battle this inflation to no avail, but we won't know probably for the next couple of months if that has actually been eased. So hence, we've seen a massive downturn in the oil price for certain oil stocks. There's been a lot of pressure on, obviously, cryptocurrency. I think, again, this is going to be temporary. Next stream, I'm going to really talk about cryptocurrency if you're into that, and what I think the future of that holds, knowing what we know today. But that's for another time. So, let's talk about peer-to-peer lending today. We're going to go through some news items and see what's going on in the news. There are a few things. We're going to talk about Loanpad, Lend Invest, what's going on in the European peer-to-peer lending companies, and Axia Funda, Blend. Talk a little bit about the FCA and some recovery stuff. So I'm not going to be streaming for too long, so we're going to get through this. If you have questions or comments, put them below. Here we go. Lendinvest issues new bonds paying 6.5%. The alternative property lender LendInvest has issued new bonds that have a targeted fixed rate of 6.5%. The bonds will mature in August 2027, with returns paid annually. The first coupon payment will be made 8th of Feb 2023. If you want to get in, you got to put in a minimum investment of £1,000, and then after the first 1,000, you put in multiples of 100 thereafter. If you already have existing bonds through LendInvest, you'll be able to exchange your 5.25% or 5.375% bonds to the higher interest rates, and these are all apparently secured by property and at conservative loan to values. LendInvest is kind of one of those unique companies where usually I say bonds, these private bonds, not really a big fan. I think you're better off probably with them just taking the peer-to-peer lending loans, and that way you can get paid on a monthly basis rather than twice per year. There's always a higher risk when you're getting paid twice a year, because if something does happen to this company, getting paid twice a year puts extra risk on you versus getting paid monthly. And the other thing is these bonds are going to be traded on the stock exchange beginning in August, which means the price of the actually purchasing the bonds and the values will fluctuate based on trading prices. So you do have a little bit of added risk. But having said that, LendInvest has a really good track record. Probably one of the only ones that I might consider taking a bond. But I probably wouldn't take bonds myself through them. But they may be one of the companies that you could look at and say, I could risk taking a bond with them. But that's what's going on with them. They send out a monthly platform fact sheet. Am I not sharing my screen? There we go. So this is the fact sheet for June 2022. I really like reading this over because it gives a good overview of LendInvest, what they're up to. They only had 3 investments for June. I think this is a kind of ongoing thing, that June was a bit of a quiet lending month for peer-to-peer companies, not only in the UK but also in Europe. So they had 3 posted investments at an average of about 4% returns, which is pretty low for them. And average loan to value 64%. You can see here it's just a grand total of 610,000, which again for LendInvest kind of relatively small, but half of 500,000 in the southeast and 110,000 in Bonnie, Scotland. And then this is their report of the live current investments. They have 74% on schedule, 2% in arrears. That means that a loan has missed 2 or more payments on it, so the borrower is behind 2 or more payments. We got 17% out of term. That is an unauthorized extension of the loan terms have been breached, and then 7% in enforcement. So not terrible numbers. I think the 17% out of term, you might like to see that much lower, and then obviously the arrears and the enforcement you would like to see lower too. The arrears isn't too bad, 2%, but the enforcement of 7%, you would like to see that lower. But it's always good to read that monthly fact sheet just to keep yourself up on how the platform is actually doing. Folk to Folk reports rising loan values. So this company here, and I've been trying to get these guys to come on the stream. I continue to communicate with them on LinkedIn to bring them on as a guest, but their average loan size has increased by 55%, which is a reflection of a trend, they say, towards larger property developments. It's a pretty big jump if you think about it. It means that if a year ago maybe they were doing loans for $250, you might see the same type of loan now coming in at $500,000. So pretty big increases, bigger developments, which means more to offer for you as an investor. If you're looking to put money somewhere, that's a good thing. Hopefully they're picking out the right type of deals for you. But they're seeing their average loan size go up from 340,000 up to 530,000. They said they have less than a handful of borrowers who are in forbearance. So I'm not really sure what less than a handful means, but I would take that to mean a pretty low amount. So they're obviously doing their due diligence on the lending side. And they're a pretty big size platform. They have an average default rate of just 1.21% since they launched, which is lower than the industry average of 2 to 3%. So they seem to be doing the right thing. And I expect more loans to be coming out through folk to folk over the next few months. And bigger loans too. Zopa has been rebranded, so as old Zopa investors like myself, you will not see Zopa's name anymore. It's going to be called Plata Finance. Interesting name. Everything you could have picked, you picked Plata. Plata? I don't know if it's Plata like a platter of food, or Plata as in the more posh way to say it. But they have been rebranded, so Zopa will no longer be branded Zopa because it has been sold. Interesting. Just a little bit of history there. We have a new FCA chair, Ashley Alder. This guy looks like a pretty serious dude. He is a Cambridge law graduate. That was my instant pot cooking some black beans. This is Ian Alder. He looks like a serious guy. He's a lawyer. He has been running the SFC, which is in Hong Kong. It's the Securities and Future Commission in Hong Kong. And he's going to be coming back to the UK to be the head chair of the FCA. Interesting. Good news for people who are invested in Assets Capital. They say that investors, queued funds are now entering Access account. I did log in to my own Assets Capital account today. I've not really seen much action, so I presume I'm pretty far back in the queue. And I imagine their queue is pretty large, but they're going to be dripping money from the queue back into the Access accounts. Finally, I mean, this has been ongoing for a long time. Hopefully that's going to get the queued accounts moving into those Access accounts so you can actually make some money. There is currently a queue for new investments due to the excess level of demand, but that will try to be reduced according to Assets Capital. I don't think they can say how long that is going to take. I imagine it's definitely going to take several months before everybody's going to see that their money is invested. And it really depends on the loan flow, how many new loans they're writing, before you're going to get your money into these new Access account loans. But I think that's a step in the right direction for sure. Come on, assets. Let's go. Okay, Axia Funding. These guys have created a new portfolio product. If you remember, this is a company that basically peer-to-peer lends to finance legal battles of litigation in the courtroom. You can put your money up. If they win, you get returns on your money. If they don't, you get a big fat zero. But now they're offering, which I think is really good as a way, to kind of diversify yourself if you wanted to invest in this. And you can put your money into a bucket of loans, and they're targeting a 28% return across 90 different cases, which I think that's a really, much better way to invest for you, because investing in lawsuits it's a bit of a coin toss. You just really don't know which lawsuits are going to win unless you're a lawyer. You have a lot of legal background. You really wanted to dive in, see which law cases had a good chance of winning. But this way, you don't have to worry about that. You can try to snag yourself 28%. This sounds high to me, I always think if it's too good to be true, be wary. 28% returns, that's huge. But I also think it's risky as far as what they're loaning, what they're lending money against as far as lawsuits, that can be risky because they can just get thrown out of court and you can end up getting nothing. But if you're in a portfolio product, much better off. Now, I did try to log in and see how you invest in this portfolio product, and I was not able to actually find it. So this is actually a funder's website inside the panel. So if I click on investment opportunities, I don't see any way to get into this fund, which leads me to believe, if anybody knows different, but I'm thinking it's already been snapped up and there's just nothing available, or maybe it hasn't come out yet. But this is the only thing I see available on Axis Funder is £1,150 on the £1,150 and £9 on the secondary market. Excuse me. Oh, allergies. Do you get hay fever in the summer? During the summertime, I just want to sneeze all the time. But yeah, so I do not know how you invest in this, and maybe it's a case where you have to find it when it pops up, but so far nothing I've seen available. I think this is an interesting article because it really points to kind of what I've been saying about the global macro economy over the last few months, and how personally I believe we are actually in a recession right now. But Bondora said they've seen a summer slowdown for June and a lending slump. So 17.3% decline in loan originations in June, which is massive. They lent out 12.9 million euros, 10.9 million last month, which for them is not really that big, I think. They said the largest decline came from the Spanish market, where volumes fell by 56.4%. But they only lent out, 360,000 euros, and then second decrease was in Finland, which fell by 19.4%. Again, I think some of those countries, like especially Spain, Italy, they're experiencing some real economic turmoil, and it kind of makes sense that loan originations would fall. But I also think this is kind of thing we're saying also in the UK, because if we go back to that Lend Invest from June, where they only put out 3 new loan opportunities, that's pretty small, I think. So we are seeing it. And then Mintos also said the same thing. They had a dip in July lending volumes, so they funded 48.6 million euros worth of loans last month versus 60.3 million in May, which is still a pretty good chunk of change for Mintos to be lending out, but it's a significant drop. And these are just important things to pay attention to when you're looking at the global economy and what is going on, and especially if you're a stock investor and you're trying to figure out, hey, are we in for a decline in the market because of the economy? And I think these two stories show that if the lending is down, it gives you a pretty good indication that there's just not as much appetite for the risk on the lending side. So keep an eye out on those things especially if you're a stock investor. Now in the UK, we had a record-breaking quarter for second charge lending, which reached £143 million, according to the latest secured loan index from Loans Warehouse. Whenever I hear Loans Warehouse, I always think about car phone warehouse for some reason. Silly. The growth of second charge lending continues to surpass all records since the financial crisis, when lending reached its highest level since 2007. £840 million has been lent out year to date via second charge lenders such as Together Money and Selena Finance. Second charge loans, again, I see that type of headline and I wonder, is that a good thing? Second charge loans are inherently more risky than first charge. Does that mean that people are taking on more risk when it comes to their lending? And how is that going to affect the peer-to-peer lending industry itself? Because some companies are putting out second charge loans for you guys. So, again, just something to be aware of, that there is a lot of that type of lending going on. And sometimes you just don't get paid as much as you should for the risk that you're taking on second charge loans. So just pay attention to that. I always say that you don't want to FOMO into peer-to-peer loans that are second charge just because there's nothing else out there. Say you really are looking for a place to put your money and there isn't really any first charge loans out there, and you see these second charges popping up at 9%, 10%. I would say be very careful with that, because you don't want to just slog your money in because there's nothing else available, because 9% on a second charge loan is generally pretty risky. Okay, so Narinder from Kuflink thinks the UK peer-to-peer market is very strong and they will not be expanding into Europe in the near future because the UK market is so strong. I think it's this is important because here's a picture of Narinder, by the way, looking pretty spiffy up there. But I think this is an important story because I've said this before: when companies expand out of the UK into different global markets, it's always a risky thing, because anybody that's invested outside of the UK, it's a completely different landscape. And that can be risky for a company that maybe isn't experienced, or they don't know what they're doing. They expand out into a different country. Things don't go the way that they have for them lending in the UK. It's something they understand. Outside of the UK may not be understandable. And then you can have potential platform issues because of that. Sometimes over expansion causes a lot of strain on those companies financially. So Kuflink is staying put when it comes to just UK lending, which I like. I like the fact that they're sticking to what they know. That's what we want to see in most cases. Then on the opposite side of the scale, we have Shojin, who has been on the stream before with me, and I think they're doing good things too. That's Jatin Ondia. That's his name. They're launching a joint venture in Israel. Now, I think joint ventures can be a little bit different than if these companies go solely into trying to expand outside of the UK. Joint ventures are a little bit safer because they obviously have somebody on the ground inside that country that knows about lending in that country. So I think joint ventures are a little bit easier to swallow for me than solo venturing out into different countries. So I don't mind that one as much, but they're going to be partnering with an Israel-based investment platform called Realty Bundles as they expand globally. The new partnership will boost Shojin's ability to invest in the growth of the company while allowing Israel-based investors to access Shojin's UK real estate investment opportunities. And they're also expecting similar partnerships in Australia, South Africa. So they really are trying to become global, which I think is cool if they do it the right way. Good news for Loanpad investors. We're seeing a rate increase. As we've seen interest rates start to creep up, you've probably gotten the notifications through your banks that Ford Money, Marcus, all the banks are putting their interest rates up. I think I saw today 1.36% on a savings account now, which, if you think about a year ago, we were basically getting 0.25%. And we always ask that question, well, are peer-to-peer lending investment rates going to increase to us, the lenders, as these interest rates go up? And the general consensus was no, because of the competitive market, but Loanpad is trying to eke that percentage up a little bit. So you're going to get, right now you're getting 4.1% on the premium account. The instant access one, which is, of course, if conditions are good, which they are right now, you get 4.1%. And from the 1st of August, you are going to get on your premium account, that's the 60-day notice account, 4.2%. So I think, super positive. You get an extra 0.2%. It's not huge, not groundbreaking numbers, but for the level of risk that you're taking with Loanpad, I think the 60-day account for me is a way to go, unless you really need access to that money. I've been going solely into the premium account of 4.1 and 4.2%. So, and the reason they've risen it obviously is to counter higher inflation, to give you as an investor a little bit more on your money. this inflationary situation. It's put a lot of strain on people who are trying to save money. But I can tell you it's a hell of a lot better than what you're getting in a savings account at 1.3%. And are you really taking that much more risk inside a place like Loanpad? Yeah, more risk, but how much more risk? There's not a massive gap. Especially since Loanpad is a little bit more seasoned now. They've got that track record history running back 2019, so we're coming up year 3, year 4. So I continue to really like what Loanpad is doing. I love the way that they're passing on a little bit of extra interest onto you, because most of the companies are not. So good job, Loanpad. You get the thumbs up from me for that. Speaking of that, let's log in. Excuse me for sniffling. Let's log into Loanpad and just take a quick look at their statistics. See what's going on in their data, the data field, data feed. See if anything has changed. It's been a while since I've logged in and looked at these numbers, but I always like to keep an eye on this. We had a live loan number of 155, total loan value of 130.7 million, average LTV 43%. So total Loanpad loans 65.1 million on the value of 13 million. So still keeping those LTVs low. That's what we want to see. Low loan to values, high live loan number. We still got the lending partners at 9. We haven't seen the introduction of that 10th lending partner yet. Interest coverage fund at 42,000. That was great. We see no loans that are being covered by the interest coverage fund. Those are loans that get into trouble. So nothing troublesome at the moment. And then again, estimated time to sell, estimated time to get invested, just 1 day. Look at this. They've had 307 loans on Loanpad since inception and repaid 152 loans. That's a ton of repayment history. So if you're ever thinking about, does Loanpad have the history to where you can feel comfortable going in to that peer-to-peer lending business after year 3, coming to year 4, there's your answer. They've repaid 152 loans. Borrowers have repaid to Loanpad 152 loans. So that's 56.8 million for a smaller company. They are really just doing good things. They are going great guns, and I could definitely see these numbers really increasing over the next year to where it solidifies Loanpad as one of the top peer-to-peer lending companies, not necessarily in size, but historically, you know how they've done in history. The lender base is increasing. People are putting, people are putting more money in. You got 16,747 pounds per lender. So I just think they're doing all the right things, and I appreciate that history that they're offering us. Blend is bullish on Northern Ireland. If you've been a Blend investor, you know that they really like Northern Ireland as places to find opportunities, and they continue to look to Northern Ireland to invest in. You've seen the average house price over there has increased by nearly 28,000. Thank you, Fly. Since the start of the pandemic, Northern Irish prices, the fastest increase of all UK regions at plus 12% versus, I don't know what the actual England house price increase has been. I think it's high, but I don't think it's 12%. So Blend is going to continue looking towards Northern Ireland to find you deals. Lending Crowd suggests investors move their invested funds. If you have money on Lending Crowd sitting in your account, get it out. When you see somebody saying, we suggest that you move your uninvested funds, probably should pay attention to that. I think I have a little bit of money on that. It's just a quick reminder. Peer-to-peer lending is going to play a vital role as government misses house building target. These numbers were crazy. I was surprised. They missed their target by 180,000 homes. That's what the government said in their manifesto in 2019 that they wanted 300,000 new homes to be built every year, but 2021 they were only able to get 120,000 homes built, which isn't really surprising, but peer-to-peer lending is playing a big role in providing financing for house builders. So that's a good sign of things to come. It means that we're going to have demand on loans for us as investors, because this housing demand is obviously there, and it's going to keep rolling forward. See what else? Recovery loan scheme deemed a failure. Wow. Yeah, I don't even want to talk about that. That's been a big debacle. Bye-bye. I don't want to talk about that. FCA chief says he wants firms, say innovative firms want crypto regulation. It's really more of a, I think, a sign of things to come. The FCA chief, Mr. Nikhil Rathi, was over in Washington, D.C., talking about cryptocurrency at a conference over there. And he said that people want, especially companies, they want to see cryptocurrency regulated, and that is going to come, even though it's not necessarily their place to introduce that, which I don't really understand, because I think the FCA could at least help implement it through the government. They're more of a hands-off, like, oh, it's not we don't get to decide these things. But I think the government will put those in place within the next 6 months to a year. We'll see more cryptocurrency adoption. And then just one other thing here. For everybody saying, oh, there's so many scams in cryptocurrency. Well, look at this. 171 million pounds lost to investment scams using APP fraud. That is authorized push-to-payment fraud, which has nothing to do with necessarily cryptocurrency. It's just one of those scams where you get a phone call or a text message, fake email, something telling you to make a payment. It could be a company like UPS or FedEx or Amazon. It could be a completely fake website that looks like a real website. They get you to click on it to make a payment. They may say, oh, you owe an invoice. Do you ever get those scam emails that has an invoice attached saying you owe this money, here's an invoice? That's what an APP, authorized push payment fraudulent email is, and it's a big problem. There were a total of 196,000 APP scams in 2021, with combined losses of 583.2 million, and the biggest category was impersonation scams, totaling 214.8 million. And only 40% of the losses was returned to the victims. So, be safe out there. It's not just crypto people that are scamming. There is all kinds of scammers out there who want to take your money from you, which is very sad. What else? I haven't talked about the Trading 212 portfolio because honestly, I've been afraid to log in. I'm afraid I'm going to see some bad news because oil has been in the poops, and I haven't logged in. I'm going to log in right now. It's probably been 2 weeks since I've looked at it because I wasn't planning on making any changes, and I thought I was going to see a lot worse number than I just did. Here we go. 16,023. So we've dropped about $3,000 on this account, which actually is not as bad as I thought it was going to be. In fact, I'm surprised to see some things in the green. We have Arch in the red, 6%. Not terrible. I think there's a little bit of cash in here. Maybe I'll invest that today because we are on a down day. International Seaways down 6%. Vermilion Energy up 8.3%. This has been our stinker right here. Zim Integrated Shipping's 31.4%. So a less concentrated loss, less diversified share fund here. We got 1, 2, 3, 4, 5, only 6 stocks in here. I don't know if you've been following this for a while. There used to be a lot more stocks in here, but I decided to take the gamble, go more concentrated, take more risk. So far, these oil stocks have not been very nice to us, but I don't plan on changing any of these. I think this market will bounce back. Zim, I think, is going to come back. Arch, I think, it pays a massive dividend. They are going to be fine. And all will be well and good in the trading 212 portfolio land. Let's have a look at your comments. Please hit that thumbs up if you like the stream. I know it's been a while. Maybe I don't deserve a thumbs up because I haven't been here for a while. So, but if you could do that, helps me out. Gives me a little YouTube pat on the back. I will try to be here more often so I can give you these information-filled evenings. See what you say about the comments. We've already hit 9.1% inflation in the UK. Hi, Alan Stratford. Nice to see you. We've got fuel issues you haven't. What kind of fuel issues do you think that you have that the US doesn't have? Because I've been watching the fuel prices over here skyrocket. In some places, like California, they are very, very much higher than they used to be. So I don't know if it's a supply issue. Likely it's just priced on the demand. Shojin have some new loans available now with high interest, but a minimum of 5K. That's a lot. So that means really, if you want to be properly diversified in Shojin, you got to have at least 25K, preferably 50K invested into 10 loans. Be careful. Make sure you are diversified. WH. Hello from Essex. I should put you on here. Let me put you on the broadcast. Welcome, Essex. This is the first time you made a comment on here. You love the content. Your last peer-to-peer video, you featured Easy Money, which inspired me to open an ISA with them. How are you getting on with your ISA with them? Please provide an update. Are you hoping to have them on your channel? I don't have an ISA with Easy Money. I don't know that I said that, so I just looked at what they had to offer and thought they had a decent product. So, yeah, a little bit of confusion there. No ISA. I don't actually invest myself with them, but they seem to offer a decent product. They have a good branding, good backing. So no changes. Yes, I am trying to get them on the channel. It can be challenging. Some of these corporate companies, they don't want to. Some of them are just nervous about coming on live because they think that I'm obviously going to grill them or tear them apart. But I will continue to try to get them on. But thank you for commenting and being here, WH. Annabelle's here from Spain. You're a bit tardy tonight. Yes, you are. The Axia funded loan has closed. So, yeah, I guess I was late on that one. Well, that sucks. I thought someone said that if cases on Axia funded go pear-shaped, you could end up losing more than your original investment. I don't know how. What are they going to come back to you for money? I think whatever you put in is what you could lose. But maybe I'm wrong about that. I think you could just end up losing everything you put in if that case gets dismissed or they lose, and you wouldn't get anything back. So I'm not sure how you could lose less than what you put in though. Any news on Planned? Yes, actually. Let me look at my email real quick because I got an email from Robert. My email is causing me fits today. No, stop. Okay, let's have a look. Here we go. So their first funding line has been fully deployed, 100% performing, and an average APR interest of 14.21%. I don't know if I'm supposed to read that out live, but sorry, Robert, if I wasn't. So it seems like they've put out 350K on Planned, which is 100% performing at an average of 14.21%. So that's a really good start. Let's take a look at Planned, the website. See what they're up to. Blend. I do like Robert over there. I think he has a good product. Do I have an account? I don't think I have an account, but let me show you what they're doing. Look at these happy. These guys are so happy. They said, oh, I just borrowed money from Plan. And this guy said, yeah, now we can go to the pub and get some fish and chips. And this guy like, what are you talking about? Who are you two? This I'm being goofy. So this is if you want to borrow money, you come here and pay. Look at these rates, 24% a year. And then it goes down the longer you borrow. You borrow 5 years at 13.5%. The more you borrow, the more your rate goes down. Where is the investment side? Not seeing that yet. I love the website. Very cool colors. Huh, yeah, so they seem to be performing well, at least early on in the day. So there's your plan news. Dave Dawson, how are you? Isn't there 0.1% only on ISA accounts? No, it's both regular and ISA, but just the premium and not the classic. Richard, it'd be nice to see more social housing funded as part of the peer-to-peer sector. I totally agree. Assets Exchange, even though it's not building, but it's more social. If you haven't checked out Assets Exchange, they lend from investors to buy more social housing, which I love. Yeah, inflation sucks. Remember the transitory comments. If inflation is transitory, your government lies to you. If that isn't a good indication that your government is lying to you, then I don't know what else is. You are going to lose money to inflation on many platforms. I see this as being a problem for the next at least 6 months. It has to be handled. Yeah, I have some thoughts about that, but it's going to be too long for this stream, so I'll do another stream because it obviously involves like why you'd want to own Bitcoin for this inflation problem. But just remember, when you're getting higher interest rates on peer-to-peer platforms, you're taking more risks. So even though you're saying things like Loanpad or Easy Money are paying you a lower percentage, you're really taking less risk. So you have to do what's comfortable. And it's better than the bank. Think about your savings accounts giving you 1.36%. You're losing 7+% to inflation. That's crazy. If you're in the US, you want to look at I-bonds. You can get I think like 6 months worth of I-bonds at whatever the inflation rate is. So right now they're paying 9%. You can put in $10,000 per person. That's pretty cool. Hi Patty, how are you? I've cashed out of the stock market and put all my funds into Loanpad Pro Tem. Okay. So I haven't found any way to actually sign up as a lender on Plan. Maybe it's not. Maybe they haven't launched that yet. Fish and chips in Cornwall takeout was £13. You remember when that was what, like $3.50? Crazy. I think it's time to be putting into the stock market drip feed into solid companies. There are a load of bargains. I agree. There are bargains. Can you invest in Plend yet? I don't think so. I don't think they've launched yet. I'll let you know when they do. I think what they did is like early adopters could get in. They had a sign-up list. But right now, you're just going to have to wait. All right, that's going to do it. We are, 48 minutes and 50 seconds. This is a record, okay? Note today, July 14th, We finished the stream in under an hour because we got through this stuff quickly. Thank you all for being here. Love you guys. I will see you soon. Keep an eye out for the email. If you're not on the email list, go to financialthing.com, sign up so you can get notified when the next stream is. Tentatively planning that I'll be here next Thursday, but I plan on doing a second stream impromptu, so it could be any time. So hope you enjoyed it. Leave the thumbs up if you did. If you didn't, leave it anyways because you know you want to. And subscribe. I'll see you next time. Hope you guys have a wonderful weekend. Love you guys. Take care. Bye.